Well, hello there. My name is John Jay. Please allow me to introduce myself. Oh, Lord, I've already done that. Well, my name is John Jay, or it was John Jay. This is Professor Mark's Stock Market Weekly Report. We hope you enjoy it.
Hello, everyone. Thanks for tuning in to this week's Stock Market Jobber newsletter. I especially want to thank our special guest, John Jay, for being here. He's probably one of the most important people you've never even heard of, which is really kind of sad. If you haven't, you should read more about history because he was one of the most important founding fathers. But for some reason, the other ones get more credit. I mean, like Jefferson. Jefferson was the most overrated of the founding fathers. I mean, I'm not saying the guy was a bad guy, but he was definitely the most overrated. You know, he didn't know where the future of the country was coming from. Supposedly he's all into rights, but yet he was a big slave owner, blah, blah, blah. Anyway, that's not what we're talking about. We are going to talk about what is going to go on in the market this week. All right, so we need to understand that when markets are moving, they get to important levels, and some levels are more important than others. Money can be made when markets reach these levels because they tend to make big moves. An important level is like a fork in the road. It's pretty rare that a market gets to an important level and just kind of hangs out. They tend to reverse or break through, and that's where our opportunity comes. As traders, we don't care if it's going up or down. We just care that it's moving. So these are called support and resistance levels, right? When a market's going lower, it's because there's not enough demand or buy orders to absorb all of the supply or sell orders. So the sellers have to offer their shares at a discount, and this forces a downtrend. At a resistance level, there's more supply than demand. If a market is trending higher, it's because there isn't enough supply or sell orders, okay, to fulfill all the demand. So buyers need to pay a premium. 98% of the movements in markets are because of psychology. Now, levels that were resistance can convert into support, or levels that were support can convert into resistance because of buyer's remorse, and we're going to see that. Levels that were resistance can turn into support. Levels that were support can turn into resistance. We're going to see that. It has to do with psychology. These levels can be important for a long time, months, maybe even years. And the best traders know where these levels are. And they know that when something gets to an important level, it's time to pay attention. It's almost like fishing, right? Like one of my best students talks about fishing, and he makes this great analogy. It's like you only fish when the fish are biting. If the fish aren't biting, what's the point of fishing? It's the same thing with the market. You know, sometimes there's just nothing going on. Sometimes it's okay to, go fishing or go to the movies or watch TV. But when the market's moving, that's when you need to be involved. It's okay to stay on the sidelines. So knowing when the market is about to make a move is about understanding whether it's in or out of equilibrium. If it's in equilibrium, things are going sideways. If it's out of equilibrium, they're going to move, right? I call what we do at stockmarketjobber.com market equilibrium analysis. All right, so let's look at some real-time examples here. Now here's our S&P 500. It's overbought and it's at resistance. Okay. Overbought means that something is trading at a level that is above what would be its normal or historical or usual trading range. And the vast majority of the time, something is within its usual or historical or typical trading range. If we get above that, that draws sellers into the market because they're going to be expecting a reversion to the mean. This red line here is what we call Bollinger Band. It's 2 standard deviations above the 20-day moving average. Now, I don't know statistics, but I do know that people that tell me about statistics say that 95% of trading should be within 2 standard deviations of the mean. So when we exceed this threshold, there's a chance there's a reversion. We could see it here, we could see it here, we could see it here. My guess is that this week we're probably going to see a little bit of profit taken. I don't think it's going to be anything major, but I would be surprised if the market moves higher. We also see this concept of an important level around 408. Resistance turned into support. Why? Seller's remorse. Investors sold, the price goes higher, they regret doing so. A lot of them tell themselves they're going to buy it back. Now, what do we have here? Support turns into resistance because of buyer's remorse. Investors bought, they regret doing so, and the price goes lower. They tell themselves if they can get out at break even, they will. Probably going to see some movement downward because we're at resistance and we're overbought. Think about it. Resistance is a level where there's a lot of sellers or people that want to sell. Overbought means sellers are going to be drawn into the market. So you got this double whammy, okay? You got a level where there's sellers and you got market conditions that are going to draw sellers into the market. And as you can see, it was resistance here. We got to resistance here and we sold off. Notice how when we get to resistance, we tend to sell off? That's because we have investors who, they start to get worried. They want to sell, but they're afraid someone's going to offer their shares out at a lower price. So they start to offer their shares at a lower price, and they end up undercutting each other, and it becomes like a snowball effect. So just remember, overbought markets that get to resistance tend to sell off. Here's our technology sector. I think you can almost bet your bottom dollar, although that's hyperbole. Don't put all your money in one basket. But there's a good chance we're going to see some profit taking in the tech sector this week. Resistance here, overbought. There are people who sold here, people who bought here who, like, when the market went lower, like, what the hell did I do? I made a mistake. Why did I sell? Why did I buy? I'm sorry, I got it confused. Why did I buy? Oh, if it gets back up to my level and I can get out at break even, I'm going to. So you're going to have sellers or remorseful buyers trying to sell. Once again, psychology. Overbought. Resistance. Resistance is a large group of sellers. Overbought conditions will draw sellers into the market. So good chance we make a move lower. And I'm not saying the market's going to crash or anything like that, but I would be surprised if we don't have some kind of a correction this week, or at least a consolidation. We can see here, resistance became support. Okay, resistance becomes support. All right, I think Mr. J is going to come on again here. Okay, Mr. J, most underrated of the founding fathers, author of the Federalist Papers. Please come on in.
Professor Mark thinks it's sad that you've probably never heard of me. It's a shame because few contribute as much as I did to the founding of the United States of America. As one of the authors of the Federalist Papers, I helped draft the New York Constitution and the Treaty of Peace with Britain. I was also the President of the Continental Congress, Secretary of Foreign Affairs under the Confederation, the first Justice of the Supreme Court, and the Governor of New York. How about that, Barry?
Yeah, I told you this dude knew it was up. And, his estate was right up the road from where I live. All right, so then, anyway, this is our healthcare sector. Once again, we see our concept. Now, I beat this to pulp. Some of my superiors at Benzinga are like, oh, you got to give trade recommendations. You got to give trade recommendations. It's like, come on, man. Everyone's got to come up with their own trade recommendations. You don't come to a karate class to hire the sensei to beat someone up. You go to a karate class to hire the sensei to teach you how to beat someone up. Now, of course, in my karate class, sensei would never want you to beat someone up unless they attack you first. But the point is, everyone has a different style. And this is not a trading mill. This is a school where you can learn how to trade from someone who did this for probably longer than a lot of you have been alive. All right, just vent and glow. Okay, overbought. Notice we're at that Bollinger Band. We're at a resistance level. Support became resistance. Resistance becomes support. Good chance we make a move lower. And if we don't, and we make a move higher, well, then we jump on the long side. But the point is we watch the market. We let the market tell us what to do. Right? Support becomes resistance. Resistance becomes support. Support becomes resistance. Let the market tell you what to do because it is never wrong. I am wrong. You are wrong. Kramer's wrong. Neil Cavuto is wrong, although he's so not knowing what goes on in the trading world, it's hard to even say he's wrong. But anyway, I mean, he seems like a good guy. He just doesn't know what the hell he's talking about when it comes to trading. But support becomes resistance, resistance. So there could be a move here. If we break higher, it tells us the sellers are out of the way. There's a good chance we keep moving higher. If we don't, it's overbought, it's at resistance, there's a good chance we move lower. Remember, we're not predicting what is going to happen. We are waiting for the market to tell us what to do. Here's our financial sector, and once again we see resistance becomes support, support becomes resistance. You don't need to be a market guru to see this. People sold, they thought they were great and geniuses, the market goes higher, a lot of them tell themselves, oh, I shouldn't have sold, I'm going to buy my shares back if I can get them for the same price I sold them at. Resistance becomes support. Support becomes resistance. Oh, buyer's remorse. People buy, the market goes lower, they tell themselves, oh, gee, I made a mistake, I want to get out, but only if I can get out of break even. So guess what? There's all this talk about, is the banking sector saved? Blah, blah, blah. Don't be so sure. Does this look like a sector that's saved? Does this look like we're in a strong rally? No. The banks are coming down like friggin' autumn leaves. I'm not talking about the big ones, I'm talking about the small ones. And all of a sudden the bigger ones are going down. All right. I think I'm going to bring on Mr. J again. He seems to be kind of anxious. Mr. J, the floor is yours.
On November 30th, 1783, the American and British delegation of peace commissioners met in Paris to sign a treaty that ended the Revolutionary War. Myself, Benjamin Franklin, and John Adams were among the American delegation. In accordance to American law and tradition, what had once been American colonies ceased to be on July 4th, 1776, but the British did not formally recognize the separation until the Treaty of Paris went into effect. To say that the British were somewhat uncomfortable with the whole idea and embarrassed that they had lost the war is quite an understatement. To tolerate the Treaty of Paris, famed historical artist Benjamin West, a Pennsylvania-born painter who moved to England just before the Revolution, was commissioned to memorialize the treaty signing. Benjamin West tried his best, but the British delegation refused to be painted. They felt the defeat was shameful, and rightly so it was. We were just a rabble then. As a result, the painting was a gaping blank space where they were to have been. Adams and Franklin got a big kick out of the wimpy British delegates refusing to sit for the portrait. In fact, when he returned to the United States, John Adams took the picture home with him and hung it on his wall. It is believed the painting once hung in the White House during Adams' presidency.
All right. All right. Cool. Now look at this. You don't believe me? Look at that. Support becomes resistance. Resistance becomes support. We are talking about a sector that is worth trillions of dollars. Support becomes resistance. Resistance becomes support. If you listen to these people on MSNBC or actually CNBC or um, whatever Discord chat you're in, I don't even know what Discord is, but people tell me about it. They don't know what the hell they're talking about. 98% of the time when a market is moving, it's because of just technicals. Notice how we get to resistance and we bounce off. Get to resistance off, get to resistance off, get to resistance off, get to resistance off. This is where your trading ideas come from. This is where your trading opportunities come from. If you see a sector or a stock that's at resistance and it doesn't get through, you think about buying puts. Guess why? Because there are the investors who created the resistance with their sellers start to get worried that the prices isn't that other sellers are coming into the market. And why do they think that? Well, the price isn't going any higher. So they start to worry that they're going to miss being able to sell. So they start reducing the prices they are willing to sell at. Because you got to have the lowest price in town if you want the buyers to come to you. And this creates a snowball effect. This move here, this move here, this move here, this move here. It's not because of what Cramer's saying or what Liz Clayman is saying. You know, these people are journalists. They don't have a background in finance or tech trading. All right, enough of that. I'm not here to rant about them. I just want to teach you how to make money. All right, let's go to our next sector. Industrials, support around 97, resistance around 103.50. You don't need to be a market guru to see. Now, what happens? We get to resistance, sellers undercut each other. We get to support, buyers outbid each other. It has nothing to do with the news. It just has to do with market psychology. Markets come off of resistance levels because sellers get anxious. It's human psychology. Markets rally off of support because buyers get anxious and are willing to pay higher prices. Market psychology. Forget about what they're saying on CM. All right. Mr. J is getting a little upset. He wants to come back on. Okay, Mr. J, please come back on. I'm honored to have you here, sir. It's really, really great to meet you. I mean, I've been to your estate so many times, and it's so cool. And also, you know, Mr. J had an estate down in Rye, which is on the coast, where they had an Air Force base in World War II. And I think it's the only coastline in between Manhattan and upstate Connecticut that's still the same as it was back then, hasn't been developed.
I did a lot of things that were great for the country. But sadly, most of you, lazy millennials, have no idea because you don't read. You probably would never have heard of me until now because we shine such a bright light on my greatness at stockmarketjobber.com. It's unfortunate, but considering what's happened to this one great nation, being dead obviously isn't a bad option.
Yeah, I know. Like I said, cool. Now look at this: resistance, resistance, support, resistance, support. You know, forget about me giving you trade ideas. I'm teaching you how to develop your own ideas. And I'm just a little frustrated because some people are saying, oh, well, you need to give out trade ideas. Trading is not about having good ideas. Trading is about understanding fundamentals and understanding psychology. That's the secret, okay? No one has a crystal ball. The greatest traders in the world I've worked with, you know, I worked directly with Steve Cohen, probably the greatest trader in the history of trading, at least as far as we know. And guess what, everybody? He had mistakes. So if Steve Cohen gives you 5 trading recommendations and 4 of them are good and the last one isn't, you're going to stop. You're going to cancel his service. But you know, whatever. Resistance. That's why I'm doing stock market jobber. Resistance, resistance, support, resistance, support becomes resistance, resistance stays resistance, resistance becomes support. If you know where the important levels are, that's how you make money. All right, here's our consumer staples. Once again, you don't need to be a genius. Look, support becomes resistance, support becomes resistance, resistance becomes support. I mean, you know, resistance remains resistance. You got it. There's no secret formula. It's knowing where the important levels are. That's the secret to making money. All right, now I'm getting frustrated. Okay, come on, Mr. J, please come back on. Why don't you try to chill me out a little bit? Maybe we can go to your pad and have some mead or some wine later. Although it's kind of hot. I know back in your day they didn't have air conditioning, and I'm not so cool about using an outhouse, but whatever. We'll see if we can go through a time portal and work on that.
So here's the deal with an important treaty I negotiated with Great Britain after we knocked the knees off. Not surprisingly, it was called the Jay Treaty, a lot better than being named after something like the Affordable Care Act. In 1793, the United States and Great Britain appeared to be on the brink of going back to war. It was at this time of intense nationalism, ill-formed diplomats, and miscommunications, which we seem to be buffoonery with now. In addition, Britain and France were at war. The British kept seizing American ships because they were bringing food to France, because we're always a giving people. So President Washington asked me to head to Britain to negotiate a treaty.
Okay, energy sector, hitting resistance, support becomes resistance. How can we use this as our knowledge? Well, guess what? If we reverse, we can take positions that are short in the energy sector. Puts, inverse ETFs. If we break through, well, then we can get positions that benefit from the energy sector going higher. It's letting the market tell us what to do. The energy sector is at an important crossroads. It's going to make a move. I would be shocked if over the next 2 weeks it's trading around 83. So get ready for a move, and when the move becomes apparent, that's when you jump in, and this is why you got to come back to Stock Market Jobber and check it out, because I'm not perfect, I'm not a genius, but I've been doing this for a long time, and I have some competency, and I think I can help you learn how to develop a strategy that you can use to make money. It's not about me, it's about you. It's about developing. Anyone that tells you, I can give you this system, blah, 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 that's a waste of time. You have to learn what works for you, because everyone has a different principle, or everyone has a different personality. It's pretty it's pretty darn clear. Resistance turns into support. Is support going to become resistance? All right, let me just start wrapping it up here. XLU, utilities, resistance becomes support, support becomes resistance, at resistance, get ready for a move. I mean, you could almost see this on any chart. All right, Mr. J, come on out. I think we got time for you a little bit more.
As part of the negotiations, I agreed to let the British privateers use our ports in exchange for the British Army evacuating the forts in our Northwest Territory. People went nuts. They thought we gave up way too much and it was a national humiliation. No other treaty in U.S. history has aroused such an adverse public reaction. Popular indignation swept the land, and hanging me in an effigy became a popular pastime. But guess what? Just like now, many voters back then were low information and did not understand what they were talking about. See, it turned out to be great for the economy. Rarely was a treaty so bad in the face of its produced such positive results. See, establishing a trading relationship with Britain led to the remarkable economic growth. The controversy was soon forgotten, and I became a national hero. Never has a treaty been appeared so weak in its face produced such a positive result.
I mean, look at this material sector, dude. Support, resistance, support. I mean, I know back in John Jay's day, they didn't have computers, but if they did, and I'm sure there were people that were keeping charts, you would see the same principles. Resistance becoming support, support becoming resistance. You know why? Because when you look at a chart, you're looking at a graphical illustration of human psychology. And maybe the names have changed, maybe the traders have changed, but human psychology has not changed. And that's what we're looking at. I mean, look at it. Resistance becomes support. Why? Seller's remorse. Support becomes resistance. Why? Buyer's remorse. Think the Romans had buyer's remorse and seller's remorse? You don't think the Greeks or Phoenicians did? Of course they did. If you don't look at the chart through the concept of what does this tell us about human psychology, you will never figure this out. If you become a member of the StockMarketJobber.com community, I will drill this into your head over the next year. You might think it's annoying, but guess what? When you see your brokerage account increasing in value, you're going to say, you know what, that annoying stock market jobber, Professor Mark, the guy's kind of a hard ass, but you know what? He made me money. And then at that point, folks, you could just, you could just send me some crypto or cash or rare coins. I take it all. Anyway, everyone. All right, let's see if we can wrap things up here. I'm going to bring on Mr. J one more time.
And last but not least, this is my retirement home, and my ancestors were smart enough to preserve it. Now it is a museum, so you all can see the greatness of John Jay's homestead.org. Like the way I threw that in. That's a little bit of a kick in there, we've done. So it's close to Professor Mark's house. You should check it out sometime. And I think Professor Mark's got something. He's been there a few times. Have a blessed day. We thank you for joining the Stock Market Java, and we hope that you come back to visit us on a regular basis. We appreciate you. Happy Easter.
Or maybe not. So here is me, blah, 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 la Gabelli, Cohen, market maker, hedge fund trader. I don't understand why people are so fascinated with hedge funds. But read my lesson under market lessons about what hedge funds really are, and you'll get a better concept of what they really are. Thanks a lot, everyone. I will see you soon.